thanks everybody for coming tonight. Going to start off a little bit. One of the things I'm going to ask you to do is forget what you know about typical real estate investing. This is not your typical deal. I say that this is not grandma's storage, okay? This is a completely different vehicle. The clientele that are buying condominiums in this space are what I'm going to refer to as wealthy, eclectic entrepreneurs that are looking for a space that they can personalize, be an extension of themselves. So yes, I've just called Dr. Paul eclectic, a wealthy entrepreneur, because he was one of the first people. So this is a particular offering that is combined with XSpace. Paul is PSC Properties, and he'll talk about his company and Massive Capital. We're actually going to introduce the team near the end, because what we really want you to do is to understand the offering to make sure that you understand it. So we're going to do an executive summary. We're going to talk about the space and amenities. We're going to talk about the team. And then finally, we'll end up with the most important part, the financials and the timeline. So I expect you all to read this in the 30 seconds that we leave it up. This is a 506C offering for accredited investors only. Okay, so I want to make sure that that point is made. If you're not sure what that means, ask us later or ask us sometime, but you have to be an accredited investor to invest in this project. So I'm going to talk a little bit about XSpace. As you can see, this is a bird's eye view of a very unique building. There is a facility in Austin that we'll talk a little bit about. This facility is in Houston, and I won't steal too much of the show about where it is in Houston. This is an artist rendering, and we'll get more into who did all the design and things, because Dr. Paul knows a lot more about that. But I want to give you an executive summary. XSpace is reimagining the way people use space and have adapted a winning formula from Australia to the US. This concept started out in Australia with 15 years of experience building buildings. And as these facilities evolved into bigger units, each new facility had more features. And the last 5 facilities are close to what you see here in America. And they were actually called iSpace, and they were the prototype of XSpace. They built a foundation in Texas by establishing one in the Austin market. We're going to talk a little bit about that. So it's identified a big opportunity to position COVID or XSpace in a post-COVID world where people are changing how they use workspaces, how they use the facilities that they do. And XSpace, we are creating a new, exciting asset class. That's as simple as the way I can put it, that this is a unique asset class. So we're going to talk about the space, and this is where I'm going to turn it over to Dr. Paul, and he'll introduce himself a little bit later on and introduce the folks in his group. You're on mute, sir.
Hey, thanks, Trevor. Nice introduction. Really great to see everybody here tonight. Yes, indeed, we are very fortunate to be able to have this asset to be delivered to all of you and presented to you tonight. And at this time in the business cycle, we were just talking this before we came on, and there's a prominent group in America here that does a lot of multifamily assets and a lot of multifamily projects. They haven't done a project in 9 months. And the reason is because, like everybody else, interest rates are high. It's tough to cap rates are low and the interest rates are high. So that creates an atmosphere where just things aren't moving. And so the speed of assets are not going. But this is an asset that's different. And this is an asset that we call a diversification play. And so, again, we're very fortunate to be able to have this to present to you as a diversification. Let's go on. So just real quick here, this is a picture of the space internally, the hallways in the middle where you park your car right up next to your space. Your unit space, each of the unit spaces are represented by the garage doors there. and one is open over there on the left that has Elvis in it, and people can do what they want to do and open it up and do a lot of things. So let's maybe go on to the next slide, Trevor. So this indeed is truly, I've been talking to several people. We were just talking to our chairman of the board of XSpace, lives in Chicago, and how he is talking to his business partners is that this truly is a new asset class for real estate. It makes so much sense when you think about it, a place where you can store things if you want, things where you can put an office or put some kind of a facility like that, or do your hobbies, or do whatever you'd like to do, entertain, relax. The other word that we came up with this last couple of weeks is the word entertain, because we kind of forget about that. And so when people come into these spaces, they are there, maybe they're working on their projects in the morning or so, or doing things, they're relaxing a little bit, take a break at lunch, they go outside and they start to commiserate with the rest of their fellow owners. And you meet the most interesting people in XSpace, and so it's really fun to do that. But what then happened with this space is that it has turned into sort of a community. So now there's a community of people that you're meeting. Guy down the hall from me in Austin, he sells fish, buys fish all over the world. Very interesting guy. Another person has a cold storage as their business. Another person has a bunch of Porsche cars in his. And so it's very eclectic, as Trevor said, and a very interesting space. And the thing about this is that there's really no kinds of spaces like this. And as the XSpace company has built these, they've changed the iteration of them a little bit with every facility that they build. And you can see in the center picture here that there's going to, in Houston, there's going to be terraces and balconies out on this one. They don't have that in Austin, but this is really a cool concept. Again, listening to the owners and asking them what they want. So let's maybe go on to the next slide.
Yeah, and I did miss one important part that I forgot, sorry. When I referred to Dr. Paul as an eclectic, he was one of the first buyers of a space in XSpace Austin, okay? So one of the things I want to make sure that we have someone who has bought units in the first spot in Austin, Texas, became really good friends with the founders of XSpace, and then brought this deal to massive capital, and we've all partnered together. So I omitted that he was one of the first buyers of a space in the Austin facility. So sorry I missed that.
Yeah, Trevor, and that's great. And that's why we have enjoyed it so much. And again, have learned so much about it. On this facility in Houston, we are very fortunate that the CEO of XSpace came into contact with this designer, Francisco Gonzalez Pulido, from Mexico. He is a pretty famous designer in the world, and he has designed, these are just some examples of the designs that he has done: the Bangkok, Thailand airport, a big ballpark in Mexico City, and these towers in Las Vegas. But he has designed buildings all over the world. Pretty famous guy, and we're so lucky to be able to have him to help us design the Houston facility, and that's why it looks so amazing that it does. And this is that XSpace exterior. These kind of panels on the outside, a very interesting concept, and then they put panels on the roof. There is some suggestion that somewhere along here, again, as owners and interested people start talking and wanting more things, they're talking about maybe pickleball courts or some other kind of, or a gym facility, and things like that here. But you can see here on the left-hand side, people drive into the lower level, and then there's 3 more levels up on top. On top, you can see with the lights that is the lounge, and that's where people, again, come together and mix and mingle and creates that community atmosphere. This is a rooftop area. This is the lounge there on the left, and how that potentially would look. You can have little workspaces up there. You can have, of course, the a conference room or conference table. There is specific little spots for conference rooms as well, so people can get together. And we do really like the design of this. It's very comfortable, entertaining. As this has developed, now there's other discussion about potentially a restaurant here, or providing a lunch or a dinner or something a few days a week, things like that. So again, a very cool atmosphere there in the lounge. Again, the hallways there on the right side of how they will look. And these are pictures of actual units in Austin at the Austin XSpace that was built about a year ago in 2023. This facility won an award as one of the, I think, the most beautiful buildings most beautiful and interesting buildings built in Austin in 2023. This is, again, actual pictures. You can see on the left, people have a kind of an entertainment area, pool table, large screen TV, and can entertain guests there, or business people there as well. And then, of course, the lounges or the sofas and the chairs and things like that. That's another kind of a relaxing type of area. You can see on the bottom picture in the center that the garage doors are open up so that you can pull your car indeed into your unit and park it there if you'd like. The garage doors on the third floor in Austin are clear, and if you want some more privacy, you can frost them if you'd like. On the lower right, that looks more like an office type setting or workspace setting, and I do believe in that unit itself, they are doing some podcasting as well and some recording, a kind of a recording type studio. So Austin started out originally, a lot of people ask this about the cost. It started out at about $400 a square foot to purchase. And they were able to sell them pretty well. In fact, 70% were pre-sold before the certificate of occupancy in Austin. And that was all right during the middle of COVID in 21, 22 area there. And so they had about a 6-month delay in getting open because of COVID and logistics, of course. But as units were sold in Austin and as people got to see this and understand what it was like, the cost went up, of course, right? And so they found that it averaged about 5% per month. It increased in cost to buyers. And then the last few sold actually for about $500 a square foot. They were basically sold out. It's pretty, only 4 units left of the original 106 in Austin. It's really only been open now for approximately 6 months. And so I would say that's a pretty nice success rate and success story for Austin facility. And we hopefully plan the same for Houston.
And one point too, the 70% pre-sold in Austin before certificate of occupancy, just want to point that out because it comes a very important point later on in the presentation.
These are some unit types in Houston. Honestly, these are changing almost weekly. Some of these larger units and the curvatures there, I think they're going to cut some of those down. They want to make the units somewhat smaller and affordable. And what we found out in Austin is that people would buy one unit. Let's say they buy this type G down here, and then they put their mezzanine up and that, and then they realize that maybe they want some bigger space. And so they might purchase a second unit right next to them, take the wall down, and now they've taken 2 units into one. And in fact, that's really happening quite a bit in the Austin facility. Floor plan, again, this is just a real significant, this is a prototype drive in on the first floor, and these are some of the units here. We don't know if this is going to be the final design yet, and probably won't be, but this is just an example of what that first floor would look like coming in. You can then go in, take your car, and drive right up to your unit. Level 2 and level 3 look pretty close to the same. What's unique about this facility and what they learned from Austin is that instead of car ramps that you see in a typical parking garage, they've now put in a car lift on either side of the building, and you go into the car lift, go up to your floor, and then you drive right in. So this really made the building so much more efficient and took a lot of wasted space away. So you can see in the middle, there are 3 lanes, 2 driving lanes and 1 parking lane in the middle if you need to. And again, you can park right into your unit. And that's level 2 and 3. And on level 4, they are not allowing cars in Houston, and instead have the lounge that you can see LT down there on the bottom. Again, some more units in the middle. What also has developed and had been asked for other owners is that there will be a full bathroom and shower on every floor in Houston. Besides this being a beautiful building, and you'll see in a minute the great returns on this project, the location itself couldn't be better. We are so pleased we were able to get this location. This is a location in Houston on Old Katy Road, right in the Houston Design District. There's some kind of high-level apartments right around this space. And also right across from XSpace is an Aston Martin car dealership. Down the road is a Porsche dealership, and I think there's a Lamborghini dealership not far away. Again, a lot of the people who are looking at owning spaces here are car enthusiasts, and so that's pretty cool that we're in this area where there are a lot of car dealerships. It's pretty close to downtown, only 6.5 miles. Close enough actually to Houston Hobby Airport, fully air conditioned and ventilated, of course, all of that. We're anticipating approximately 88 units here, and our occupancy will be in 2024 actually, because it's only going to be about a 14 to 18 month build. This is a super great zip code as well. I guess there's a lot of high wealthy people in this zip code, and these are the kind of people that are looking for these units. I was talking to someone here a couple of weeks ago who is a big car enthusiast, and in Houston, he says now he has to drive outside of town about 20 miles to get to a small airport hangar, and that's where he stores his cars now, in an airport hangar, and it's dusty and dirty, and he has to do a lot of things. He is so pumped that there's this facility that's in town in Houston, and closer to where he lives, and closer to downtown, and is much more accessible. So we love this location. Here's the team. So let's talk a little bit about the team. And this is the team originally from Australia. Byron Smith, his family had a construction company in Australia. They had about a 15-year experience of building storage and other light industrial properties. Again, they were pretty smart, and the thing that they did was listen to their owners and listen to their tenants. So the tenants started asking them for a little bit bigger space, and they'd love to do more in their spaces. So the next few facilities that they built bigger spaces. And pretty soon people were, putting a TV in their unit or putting a couch in their unit and having people over to entertain a little bit. And that sparked a great idea to have something like XSpace. They went on to have the last 4 to 5 of their facilities. They actually called them iSpace. And then they made them somewhat similar, and those were the prototypes for XSpace. They sold those out as well too. In fact, the last 2 iSpaces they did in Australia, again, were sold out before the end of construction. This is Howard Ecker in the middle. He is the chairman of XSpace, a well-seasoned business leader, lives in Chicago, has a lot of contacts with a lot of other business leaders. His good friend Sam Zell just passed away a couple weeks ago, so that was kind of tough on him. Lyle is a planner developer. He does the construction part and a lot of the design work. And he is working with Francisco, as we talked about before, to get this design down to where they want it. So a phenomenal team here at XSpace, totally committed to the whole project. They have their personal guarantees on the project in Houston, and they're fully committed and ready to go. This is my team, PSC Properties, and my adult son and daughter who work for us, and I'm so fortunate, blessed to be able to work with them. It's a pure joy. Ryan does a lot of our asset management and financial pieces and acquisitions and all of that. Lacey is our creative lead. She has a master's degree in journalism and marketing and design, web design, and she's made all these pretty pictures that you see here tonight. I used to be a head and neck surgeon for the last 30 years. On the side, we had a family company, and we've had that family company for about 20 to 25 years. I also had another company called Legacy Developments, and we do a lot of development and still do. We've done, now it's over like 45 full cycle syndications over the last 15 years. We had our company up to about 500 million in asset value. We did sell a bunch this last year because people were buying our properties for silly prices, so we sold them. That's kind of our experience there. We do mostly development at PSC Properties. These are some of our properties over here on the right side. Villages at Fade up in Dallas, a mixed use facility. We have a emergency room and medical office building in Mesquite. And then we are right now designing Berry Creek townhomes in Georgetown, along with Massive Capital.
Yes, so it's very, very exciting projects. And the one on the top and the bottom are with Massive Capital as partners. And a side note, I'm actually a passive investor in the medical center in Mesquite, Texas. Known Dr. Paul for a little while, and it's been super exciting working with him. So we'll talk a little bit about the Massive Capital team. So we have Sanjay Agrawal, Shrar Khan, and Mike Bailey. They are the principals of Massive Capital, and we have a much bigger team, but for this one here, we use the more condensed slide of some people. So you'll be talking to Jasmine, Maria, Candace, myself, and we do have a few of our other team members on the call, but we're trying not to make this presentation any longer than it needs to be. So I want to make sure that I'm very clear of the structure of what happens. So Paul, again, was a tenant, bought 2 condominium units in the Austin space. We have been partnering with Dr. Paul on some projects. He brought this to Massive Capital, so we partnered together. And then we are partnering with XSpace, who will be building the facility, selling the condominiums in the facility, and will be managing the facility after we're gone. Okay, and I want to make sure that I'm clear. One of the things that is not normally happening at this point in time, there has been no what we're going to call retail investor involvement. The Austin space was basically just the friends and family, business people, and they raised the money by selling the units. So it's very unique that you can get in as a retail investor into a project like this. So we're going to talk a little bit about the project right now and some of the high-level overviews of the returns. And again, you've got to remember, this is not a traditional, this is a development investment, so you have to think about it a little bit different. So on this, these are all estimated returns using our best judgment, but no returns are guaranteed, but we feel very comfortable. So this particular offering will offer about a 22.8% internal rate of return, IRR. And for those of you that aren't sure, that's basically the time use of your money. We're going to return about 1.5 multiple of your money in 2 to 2.5 years. And obviously that matches the price, the project cycle. There's a 7% preferred. So I want to make sure with that you understand what that means. Us as general partners, everybody, we do not make any money until you have made a 7% cash on cash return of your money for the period of time. So for example, you have 100,000 in, it's there for 2 years, you get paid 14,000 on that 100,000 before we get any split of the profits, any of the ownership. And then it's a 70-30 split up to a 17% IRR, and it switches to a 50-50 split once we achieve a greater than 17% IRR. And all of these numbers assume that we are going to do this, right? So we've already built this into your projections. Minimum investment is $100,000. So talk a little bit about what happens, because this again is a very unique deal that you're going to make all of your money really at the end of the project. So you put your $100,000 in, you're going to make about $49,500. And so your investment is going to turn out to be $149,500. So roughly 1.5 times your money. Then we broke them down into some of the traditional things that you can see, like your IRR, your average cash on cash, your annualized return, your exit multiple. Okay, so I know it's a little bit different. I want to talk a little bit about the timeline. Okay, so the land is purchased, the land is entitled, and the land is being permitted as we speak. So we've got the land closing in here, the city approvals, then we start the site preparation and the construction. We're estimating sometime around September, October, November, you know, it just depends on getting them done. And then the construction will happen during this period. Now, during this period, we are pre-selling the condominiums. So again, you have to remember that owners are buying their space unfinished, and then they take possession of their space and they're responsible to finish the space. So pre-sales happen during this, and then there are post-sales that happen until obviously everything is sold. Okay, so one of the things I want to make sure, and this is why it was unique that I wanted to point it out, that the first distributions will happen after 70% of the units are pre-sold. So again, it's going to take us a while to get the 70% pre-sold. We made that point on Austin, that it was at their point of certificate of occupancy, and they were going to do work through the thing. On all of this, we've taken a conservative approach. We actually hope that we can be done in less than 2.5 years, but we all know with construction, things can happen. With having to sell the units, things can happen, which is why we put in the 2.5-year timetable. All right, so this is a lot of numbers, and it's really hard to describe, right? This isn't a price per door, this isn't a this isn't a that. So what we've done, and I'm going to go down to the bottom right corner and talk a little bit about it. So there's just under 150,000 square feet that's going to be built total in it. Within that, there's about 113,000 square feet of sellable space. Okay, so driveways, lifts, common areas, they take up the rest. We're estimating about 88 units. It could be as little as 66, depending on, again, if an owner takes 2 units, that's basically it. We have already pre-sold 12 units before we even have a permit to build. And I want to make sure that I point this out. About 50% of those pre-sales are people that bought in Austin and believe in the concept and are buying in Houston as an investment. Okay, so then we're basically gearing everything on the sale price of per square foot. So there's a lot of numbers up here, but our estimated construction cost is about $322 per square foot. We've estimated an average sale of $500 a square foot. So that gives us a profit of about $160 a square foot. So this is where we are making our money. All right, so let's pop up over into the left-hand side here. One of the big differences again in Houston is we're in a prime location in Houston. And that's, we think, is going to be very beneficial to it. So we purchased the land for around $4 million. We have soft costs of about $1.7 million. And that's all the legal work. That's all everything that we need to do. There is hard costs of just a little over $25 million. That is building the facility. There is G&A and marketing of almost $1.9 million. And what this includes is all of the commissions. So if a broker sells somebody a space within here, there's a commission. Clearly, the XSpace sales team has commissions built into everything that they're doing. And so, and obviously they need to market this, right? This is something that has to have some energy behind it to market it. We have just under a $2 million contingency. We have a loan fee of $600,000. And the lender has asked for us to have just over $1 million in interest reserves. So a little bit about how this is structured. So there is just under $25 million in senior debt. So that is construction loan, development loan, whatever you want to call it. There is LP equity of 11.7 million. Us together, PNC Properties and Massive Capital, we are raising 3.2 million of this money. The rest of the money is preferred equity money. And one of the questions that was asked at an earlier webinar, there is no capital stack. So senior debt is obviously part of the capital stack. Senior debt always gets paid first, but all of the rest of us, so the LP, the preferred partners, all of us are paid at the same level so that we get bought out with what's I'm going to refer to as the institutional high-end type investors. We have a LIBOR. I know they're switching away from LIBOR, but that's the way ours is at 4%. And we have a 10% max cap on our interest rate. So it cannot go above the 10%. So we bought a cap rate. Just to give you a little bit of an idea, we have 3 years interest only, so longer than the period. We do have 2 one-year extensions on the loan. So we have plenty of conservative built into this that we believe that we will be in and out well within the 3-year period. So we won't get into any principal payments or anything on our debt. I know that's a lot of numbers and we've broken it down in square foot. Everybody can get a copy of this at our portal. And obviously we can answer any questions. So that's it. Hopefully I lived up to my promise that this is not grandma's storage. It's pretty unique. It's definitely very interesting. I know a lot of you have been invited by people within the Massive Capital team to this call. And so you would reach out to one of us on Massive Capital, whoever invited you to the call. And then we're going to stop sharing at this moment and we're going to open it up for Q&A. You can feel free to unmute yourself at any time and ask a question. You can put it in the chat and then obviously any follow-up questions we are happy to answer after this presentation. So I know it's a bit unique. So any questions, or did I do such an awesome job, and Dr. Paul, that we don't need to do this?
Well, Liz has a question.
Yeah.
Hi, Liz.
Yep. Great job. I saw on the images, and tell me if this is going to be part of or what you think the design will be, is on top. It looked like those units up there had their own outdoor space. Is that part of the design? That's completely.
Yeah, those terraces or balconies are going to be awesome. And that's kind of a new concept in the last couple of months that they're putting together and trying to get into there. So you can imagine you have your space. You saw the spaces in Austin, and you go up to your mezzanine, and then outside your mezzanine, you have a balcony. I mean, that's going to be kind of fun. So,
Paul, are you getting a unit in?
Ryan's trying to hold me back, but I know Ryan wants one. So
we're working on them. We're working on them for getting
That's
one.
awesome.
Yeah, so someone asked, do we have how many? So it basically we have to sell 90% of the units for us to be bought out. That's the goal. So we start making payments at 70%, 90% of the units have to be sold. And again, that's when we're bought out, taken out of the project.
Yeah, I want to talk just a minute about this. This is a diversification play, you know, and like I said before, we don't, you know, you should be diversifying your investment portfolio anyway, right? You should be looking at stocks and bonds and real estate, and in real estate, you should be diversified, right? So should you be all in multifamily? Well, multifamily has done great for the last 10 years or more. But right now it's a little touchy with a multifamily. So we're kind of waiting to see what these interest rates do. And of course, yesterday they were just they paused, the Fed paused, but probably in the next by the end of this year there might be 2 more raises, so another 50 basis points. So anyway, that's going to happen. And then after that, maybe in 24 things will start to settle down and maybe be better at that time. But I know personally at PSC, we are not buying multifamily right now, just because that's the way it is. However, these diversification plays come up, and this is a great time to look at these and see what they are. These are development projects, so they take a couple of years to work. Most development projects actually might take 2 to 4 years to build, but this build is actually fairly simple because they're not putting in kitchens and bathrooms and countertops for all of the units. They're basically building a parking garage, a cement parking garage with the units, and then the unit owners, it's up to them to do their own build outs, and they put in their own mezzanines and things like that. So for the construction company, it's pretty straightforward. And I do want to point out that the construction company that was used in Austin is now going to be also used in Houston. It's a company called Arco Murray, and they build all of the Top Golfs, they build all of the iFlies, they build all of the Caravanas, those kind of things. So kind of interesting, bigger buildings, and so they have great experience at that. So we're very happy to have them in the Houston area as well.
And Vinky, you have a question?
Yes, I do, Trevor. By the way, great presentation. So my question is, basically, you just have the construction loan on this one, because and you said you sold 10% already. So when do you start making payment of your loan as you're selling the units? And when do investors get paid when everything is sold, like 18 months down the road? What does that look like?
So investors start getting paid when we have 70% of the units sold, and then investors are completely taken out when 90% of the units are sold. Based on what happened in Austin, we sort of think that's a 3 to 6 month time frame. But so it's basically once we reach 70%, we start making the pref payment basically, and then by the time we reach the 90, the goal is we've already caught up on the pref payment, and everybody gets their money back plus their earnings.
So what happens after that? You just wait?
We're done. We're out.
Sold?
XSpace stays and operated.
So you think everything is going to be sold by that time? You know, say 90% or whatever the 10% remaining is.
Yes. So Austin was sold out by certificate of occupancy. They pre-sold 20% already. And they're actually negotiating a pretty big one purchase contract that Dr. Paul was telling us about today. Again, it's not signed, so you know, but yeah, we believe that it will be before certificate of occupancy. It will be at least 70% sold to start paying out on the prep payments.
Okay, so since it's a so new phenomena, you know, a lot of people don't even know. I mean, it looks very good on a paper. I never have experienced myself, but looking at it and the name XSpace, oh my God, what if there is an issue with selling, you know, and you're not able to sell in the timeline that you're projecting? So what's going to happen at that point?
That is the risk of a development deal, that the units don't sell. That is, I mean, our risk is time. If it takes longer, our IRR will go down. And then of course, if you can't sell the units and it takes longer, that is the risk of the development deal.
This is just kind of like building townhomes or anything like that, where people purchase their townhomes. So it's a development deal. So yes, you're selling as you go. Right now, we've got 20% of the units already pre-sold. We think if this other bigger deal comes in, we'll be up to 30% sold, even before we start site work. So then from there, in order to start getting distributions, we calculate that you would only need to have about 70% of units sold. The experience in Austin and the experience in Australia is that these were sold out by that time.
So, Dr. Paul, I wanted to ask you one question here. Are you giving your investors an option to purchase the unit as well?
Absolutely.
Because I'm in the similar kind of thing that I'm doing in Charlotte. So we are building townhomes. So we're giving
Yes.
the option to our investors to purchase one. It's built to sell model, and that way they can get in early on, first dibs. That way they have, some equity day one.
That would be awesome, Finca. And Jonathan is standing by with a contract right now. He's got a blue pen in his hand, and I bet he would sell you a unit right now.
Awesome. Thank you.
Yeah, and
Yes.
it's interesting too on the resale value. So I was doing a tour with an investor with Ryan, and a guy bought the units next door, and I actually know him. He bought a big project off of a friend of mine here, a huge development in Austin, and he bought it, and he was just like, I've been looking for somewhere, and I'm going to put a gym in, I'm going to put this in. And he was walking around talking to us, got business cards from Ryan for your person that did your renovations. It's a very unique space.
And Trevor, I'm glad you mentioned that. Uniqueness is definitely the topic here, because I couldn't really understand it until I saw it. But when I was able to see it at the meetup, that I know, Trevor, you put the link in the chat, and if you weren't able to go, that's a great way to see more of it in person. But there is a sense of community with the owners of all of their units. Not only do they have their own customized space, but they also know the people right next door too. So that is an awesome community aspect as well.
Yeah. It was at our open house. The other owners showed up. They actually did a better job selling this than we did, because they bought in. It's a very unique sense of community where, again, you are networking with, I don't want to call it country club environment, but you are networking with other high net worth individuals that are creative and are looking for unique workspaces. And, again, with 60 to 80 different businesses in a space like this. And if you can imagine, where else in the world can you pull up to a space, get in a car elevator, and actually park in your office if you want to?
Exactly.
I told
It
Ryan, by the way, he needs a better car, if he was gonna park in the space, or at least wash it.
That's true. I needed to watch it. Yes. Yep.
Yeah. And someone asked, is this
Bronco.
a class A, B, or C? So, I mean, this is a unique thing, right? It's not like a multifamily or an office building. So this is an industrial building, basically built to code of a storage unit that is occupiable by more than storage, correct? Paul, it's but it's a brand new, and I mean, you can see from the photos, this is the Ferrari of storage units.
Yeah, so fortunately or unfortunately, my wife and my daughter have employed an interior designer to do our space. So I don't know what's going to happen there, but we'll see what happens. Vinky, are you in Houston, or where do you live?
I'm in California.
Well, come visit anyway. Come visit anyway. And we're happy to show you XSpace Houston. Like Maria was saying, sometimes people just have to kind of see it to understand how it works and things. And so love to have any of the participants here today to come visit Austin.
Hey, this is Mohan from San Antonio. I was the one who asked the question, Class A, B, or C. The reason I asked was basically I was reading some article, some interview by Barbara from Shark Tank, that this is a bad market for Class A kind of luxury buildings, luxury real estate. So that's where that question came from.
So I would ask, what class A of what asset? Is it multifamily? Is it office? Is it whatever? This is neither or none of those, right? This is not an office building. This is not multifamily. Obviously, you can't live here. That's the only other rule. You can't live in your unit. But it's amazing that you would see that there's not, that these kind of units are highly sought after. You can imagine people who have luxury cars or whatever hobbies or everything else. There's a group in the unit down from us who are building drones. That's they've got manufacturing drones, building them, selling them, those kinds of things, hobbies, all kinds of things. In our unit, we're going to have hobbies on one side on the ground level, where we do some pottery and some painting. My wife and daughter do artwork, and then on the other side, we're going to have kind of a kitchen area for entertainment and couch and chairs and things like that. My daughter is going to paint a mural on our walls, those kinds of things. And so we're going to make it real fun for us as a family to have that and entertain there when we want to, holidays and things like that. And then on the mezzanine, that's where Ryan and I do our work. So that's the kind of space it is. So when you talk about Class A, I think that article was probably talking about multifamily or office.
Yeah, I think he was talking about some apartments in New York City or something like that, I guess.
Yeah.
For sure. Yeah.
Okay, thank you.
So let me ask you a follow-up question, Paul. How
Yes.
you said it's not qualified as multifamily, it's not a storage space either, right? It's much more than the storage space. So it seems like it's like high-end kind of gig, for ultra high net worth people, to keep their belongings there or do more like an incubator. Seems like, the way you were saying, people can do their hobbies or kick off some startup or something there. So what would you categorize the space as? Because it says XSpace, but it's not necessarily 100% storage either.
You're exactly right, Vinky, and it has evolved. And again, that's the kind of exciting, creative part of it, how people are using their units. There is some people who just store their stuff in there, and that's what they want their storage in, and that's fine. And so kind of not a secret, but I mean, again, I'm not an accountant or anything, but for tax purposes, you could probably write this off as storage space. Or you could maybe write it off as office space. But here you're maybe entertaining, you're having people over, or you're doing whatever. The other little thing, and I don't know how much to talk about this necessarily, but there are some, what I would call celebrity type people in this. There's people doing podcasts that you would know the name of. There are athletes there, pro athletes there that you would probably know the name of in these units. And they're just all over it. They're looking for space like this to have unique space, have their friends over, do things, work out of there, of course, too. And some people, of course, buy the units and they rent them out as an investment.
So I mean, on those grounds, I would think, you are targeting a totally different market, and that this market volatility might not have touched them because those are kind of ultra high net worth people wanting to do something, they have surplus money, and I don't see no reason not to be sold day one. So I think I should take my question back.
Exactly. And Trevor has mentioned this on other podcasts, again, we want to be very humble about this, right? And make sure that we're characterizing this correctly. But some of the people there probably are not going to be affected by any kind of recession that's maybe happening in the next few months. So they are looking for spaces to safely store their cars, safely clean, air-conditioned place for their hobbies. Some people are storing art in there.
Can you see the screen, by the way? So
Yeah.
I'm just going to play this quietly in the background. This is the awesome one, but go ahead and keep talking because this scene is kind of believing, but this is a video of the space in Austin.
So Vicky, a couple of people are using it for art displays and art shows. So they have their expensive art in there, and you come in on a Saturday and do that and look at art. So this is the picture of the ramp that they are not going to have in Houston because we feel that was kind of wasted space.
Because
But you can see some of the units here. You see how they're used, like this one's under construction. You're driving in. There was one unit there, and you can see these are all still under construction, right? Because it's a fairly new build.
They're
But these
taking the
units
wall
are
down
also-
between them to make a bigger unit. One person bought 4 units and it opened up the walls,
Six.
the doors. Was it 6? Okay.
4,
He
and they
bought
just bought an additional 2. So yeah,
And they're gonna open it
combining them all into one space. Yeah.
Combining it. There's the lounge up on top with the balcony.
Nice. So did you guys build this one too?
I didn't, but XSpace company did, yes.
And how long did they take to sell the whole thing?
1 year,
Mm,
just after COVID.
mm.
It's only really been open about 6 months as far as
Yeah.
people using their units. So yeah.
And this is a sample of the party room upstairs.
So basically,
It's really, it's really like nothing you've ever seen before. I mean, when Trevor said this property is like in its category of its own, it truly is. And when I flew down from Detroit to see it and the Austin space, I was blown away. Couldn't believe it. I was like, I want one of these in Detroit.
Awesome. Any other questions? Very good. Please reach out to your contact from Massive Capital. We are about 2/3 subscribed already, which is good. Always good to have some good traction underneath it. Our goal is to be fully subscribed by the first week of July. We know that July 4th puts some dampers on some people, but and one thing I omitted, if you're kind of new to real estate investing or whatever, this is a really good investment for your retirement funds. Some of the things that are on traditional investments, such as depreciation and other things, do not come into this deal. So it is a true cash play, but it makes really good sense to use with your retirement funds because you can't use those other tax benefits within your already tax deferred retirement plan. So this is one of those investments that, to be honest, that's what I'm investing with because it makes sense to do it. And then for those who don't know Vinky, I'm actually invested in a little better than grandma's storage with her in Charlotte. But it's a big new build, high-end storage, not quite with driving cars in, but and I think it's 700 units, isn't it, Vinky? It's a big one.
Yeah, I think 600 plus units.
Yeah.
Wow,
And
that's
so I'm
great.
a passive investor in that. I'm actually a passive investor in an A-class. So hopefully the rumor is not true about A-class apartments in Houston. It's a new build. They've been leasing up really well. So
That's true. We are completing, I think, this year. A third quarter, we should be seeing good lease up when we start.
That's amazing. And we're so happy to have you all here on this call tonight. And thank you again for taking time out of your busy evenings to spend some time with us and hear about this opportunity. I do want to remind you all, if you are ready to make that decision, my QR code, well, all of our QR codes is right here. Right here. If you need anything, I put some links in the chat as well. If you have any more questions, we'd love to sit down and talk with you guys about this opportunity. Please book a call and never miss one of our calls again. We've got some other links in the chat as well. So thank you again. We know you have other places to be, so we don't want to take too much more of your time. But again, thank you and hope to get you invested on this amazing opportunity.
thanks, everybody. Have a
Good
good
job,
night.
guys.
Thank you very much.
Thanks, y'all. This looks
Thanks,
great.
everybody.
Thanks.